Okay, good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you this morning. Today is Wednesday, February 24th. Good to be with you guys this morning. So, we've got a lot to discuss. Some comments coming out. We warned yesterday about these officials from the Fed. You know, Fisher, Vice Chair Stanley Fisher from the Fed, had some interesting comments yesterday. Just wanted to note real quick. You know, really throwing his hands up while at the same time quelling concerns that we might see the Fed move into interest rates and take cues from the likes of Japan, Denmark, Sweden, Switzerland, who have already moved into negative rates territory. So Fisher yesterday saying sustained tightening conditions could affect the U.S. He says, quote unquote, we simply do not know what the FOMC will do in March, noting that cheaper oil suggests inflation will likely to stay low for longer. Why does that matter? Well, guys, it's not that they're making a call on oil. And this is some commentary I saw last night, both on Twitter and on various outlets, the fact that he was talking about oil. He's not, suggesting anything about oil prices, guys. All they're doing by saying this is that they're suggesting that the inflation numbers are likely to remain low because of oil. Meaning that if we continue to see lackluster, subdued inflation, that's not necessarily going to prompt any action from the Fed to further cut rates back again, okay? Because this is due to a quote-unquote transitory factor, which is what they see the oil decline as. So a very important key note there, I think, kind of went under the table. Other comments from last night, the major takeaway is that some negative rates in Europe stemmed capital inflow, saying the Fed has no plans at present to use negative rates. And that really, again, quelled concerns that we might see the Fed either remain on a more wait and hold see approach for a prolonged or protracted period, or move into negative interest rates. And you see here the commentary causing a nice little pop in the dollar through that critical resistance range that we talked about for the entire last 2 weeks, guys. 12,123, 12,131. This being the 2016 open. So what does that mean for the dollar? Are we going to start getting bullish on the dollar? Well, not quite yet. There are some interesting positions with dollar Swiss, euro dollar. We talked about those yesterday. I am looking for a dollar Swiss stretch just higher into this key resistance range here. Euro dollar looks pumped, or looks primed for the pump rather. We'll take a look at that as well. Kiwi and Euro Aussie were also on the menu last night. But before we do, good morning here to everyone in the room. Eileen, Minho, Permendra, Craig, Graham, Hussein, Josh, Mark, Mario. Great to see you guys here in the room. Craig saying, hey, Mike, I just went long on the Aussie dollar on the pullback after a 5-minute trigger at 71.61. Stop at 71.48. Your thoughts? Craig, I'm going to take a quick segue for you, man. Let's just take a look at that real quick. Okay, so I'm not crazy about the Aussie, Craig. If you noticed, I didn't really highlight it in yesterday's update for a couple of different reasons. From the daily prospect, I really don't have any key figures of support here. So if you're taking it on purely a scalp bias, I just want to let you know, here's the scalp chart. I really don't have any major key levels down here. If you take a basic retracement of this last stretch, you can see that the 618 is still like 71.40. So I see the divergence that you're looking at. Let's see what the 5-minute trigger looks like real quick. Yeah, and the 5-minute trigger was a decent one. My only caveat on this one, Craig, is the timing, where you are in time. Again, we're just opening up U.S. futures markets about 4 minutes ago, so you'll likely see a little bit more back and forth. And the other only thing is, while the trigger was pretty decent, I do like it, both on the 5 and the 1 even. You had some nice divergence into that low. I just don't like where we're buying at. I'd like to get, if I'm playing a counter trend trade on a daily basis, I want to make sure that I'm taking that trade against a major support, against a major fib, something like that. So just a little caveat there. We'll come back to this one in a little bit, guys. I just want to go through the setups from last night first. So Craig, hope that helps, man. Okay, a note here from Eileen saying, when you get a chance this morning, can you talk more about determining extremes, support / resistance areas? Been seeing triggers of divergence, trend line breaks, looking for fib areas and a take trade. Goes 5-10 pips my direction only to reverse again against my stop. Just the headline volatility and higher uncertainty in the markets right now, or is it more Craig says, thanks a lot. Hey, Craig, you're more than welcome, man. Again, we'll come back to the Aussie. Eileen, I need some examples. Give me an example of a pair or a trigger that you saw. Most of the times, if you're seeing these triggers, guys, and you're jumping in and the stop is moving right against you, it's either one of two things, either the timing of when you're taking the position or the level of which you're taking it off of. So I'm not sure what you mean by determining extremes. So give me some more background information to that, Eileen, and we'll come right back to it once we get through the setups, okay? All right. As always, guys, feel free. The message board is there. If you have any specific pairs you want to review or any questions whatsoever on strategy, do feel free to throw them out. Okay, let's jump through these real quick. Here was last night's update. And Kiwi Dollar is one that we're still looking at. We did see the continued move to the downside. We're looking for a break of the opening range for the week. We got it. We tagged that 66.07 level. The next area of support is just lower. Here's what Kiwi Dollar looks like on the daily. And I really wanted to stress this position. I talked with, or I was kind of just messing around yesterday with Jamie for a while. By the way, a quick side note, today is February 24th, Jamie's birthday. So be sure when you guys come on the midweek strategy webinar later tonight or later this afternoon to give him some well wishes there. But for the Kiwi, this is Aussie Kiwi. For Kiwi Dollar, I had to rework the whole levels. And remember yesterday we talked about Kiwi here in the webinar. It was kind of like, yo, this thing is all over the place. I really don't want to touch it. Well, we reworked the levels yesterday and got some clarity. So some quick tricks. A basic trendline support extending off that low from November and the low that we made for this year. If you take that and mirror that slope to the high from October, okay, you can see that that trend line, while it did show a little bit of a messy break here in December and early January, look at the highs. 1, 2, 3. Okay, take that same slope now, okay, and take that sliding parallel down to the low that you made in the 21st of October, and look where the lows come in. Resistance, resistance, break, support, support. So you have a very well-defined range that the pair is trading within. One thing that you always want to keep in mind, guys, is that, you know, when you get ranges, I'm just drawing here just for example purposes, when you get ranges like this, really tight consolidation patterns that are very steep, right? And you see a topside break, or if you get a very strong upside channel or range and you see a downside break, these won't give you quite as strong breaks as something like this. The deader the gradient or the more mild the gradient, typically the more decisive, let's call it, break that you'll get. You'll get a break that should run, is my point. So long story short, this is a major key range. From a scalping perspective, you're trading this as a range. So again, as you get towards near-term support, you're looking to clean up your book, stops to break even. As you get near-term resistance, same thing. On a break of this range, you're likely to see the market run. Okay, you're not going to get kind of a swivel out like this. You should see a more ascertainable, clear, decisive break. So that's kind of the broader structure for the daily chart. On the intraday, it looks quite interesting as well. If we take a step back here, if you guys remember, this was the ML formation that we were working off of earlier in the year. This is off the January lows. You saw that break last week of the lower median line parallel. What do we do after that break? Key support, check that as resistance, check that as resistance. Turns out that's the same line that we just talked about on the daily chart. Okay, so it shifts the focus to the downside. And near term looks right here like we're trying to make a break objectively of the weekly opening range low. Here's your weekly open. Here's the weekly opening range low. See a break below it. So you might come back up and test this again as resistance. If you do get a decent rally here, I'd be looking for short triggers heading into 66.77. And near term below 66.77 will continue to favor the short side. One other technical aspect that you want to keep in mind that further gives us validation for our directional bias is the fact that the last 4 out of 4 times the pair has broken through the 200-day moving average, we've seen the next session reverse and close below. Happened once in December and 3 times this month. With every break through that 200, seeing a very strong move to the downside, break through the 200, very strong move to the downside. Here we are again. So use these little tidbits and technical factors, guys, to give you a little bit more confidence, a little bit more conviction on the directional bias and the trade. So We have a picture of the broader picture of what Kiwi's doing, the key levels that we need to keep in mind. Immediately from this level, you do risk a little bit of a near-term rally, okay? You have momentum, price action making a lower low, the oscillator making a higher low. Pretty messy and ugly trigger break, but it's there nonetheless. And you do risk a near-term recovery. Again, on that scenario, we'd be looking for that rally to offer some nice short exposure back on the downside. Okay, and a quick retracement just of this week's range to give us some color for today's price action. And we'll keep an eye on this level here for possible rallies here to get some short exposure. Again, I'd like to stay weighted to the downside sub 66.77. Well, let me take that back, guys. I'll be looking for triggers into the 200-day moving average. The bullet or the bearish invalidation is going to be up here at 66.77. Keep in mind, again, the 618 just of the near-term range of this week is just below at 66.70. So a very key range here for our near-term bearish invalidation level. Subsequent move lower, excuse me, and you're still looking for that move into key support at 65.50, 165.47. All right. Any questions here on Kiwi Dollar? Hey, Eileen, I see your question there. We will jump right into that Aussie once we get through these, okay? So I do like the Kiwi. And again, we'll continue to watch this one and see if we can get that other entry on the short side again. Okay, so that is Kiwi Dollar. Well-defined daily range we'll be looking at. Again, my notes say approaching the range lows, and we'll be looking to see if we can get that stretch into 65.47, 65.55. Next up on tap from yesterday was Euro Oz. This is also a setup that I highlighted on Daily FX last night. Very interesting and critical area of support that we're coming into. I really can't stress this enough. On Euro Oz, if this thing breaks below this level, I think, sayonara, you're likely to see a really big decline. There's a lot going on here, so let me walk you through this real quick. If you guys recall, Euro Oz, the last time we talked about Euro Oz was sort of when we were pivoting back to coming back into support at this longer dated median line formation. Again, this is the high from, August of 2013, and the highs from 2014. We worked with this median line formation for over a year. You can see that the lower median line caught those lows. The median line itself offered some very nice pivots in price, and the upper median line parallel this year so far has been an exceptionally nice pivot in price. Here's your December rally, resistance, breakthrough, support, and here we are again, support along that same median line. Aside from that, okay, basic structure for the ascent off the lows that you made last year. Sliding parallel extended off the low. Nice pivot in price, caught the lows here in late December, and here's the low again. If that wasn't enough, the 200-day moving average right now sneaking in at 151.92. Yesterday was at 151.86, long story, offering some support here for Euro Oz. So we're not looking to call lows, we're not doing anything of the sort. The broader bias remains weighted to the downside below the high day close for the year. You saw that again on the February stretch here. We failed to push above 50, back below or above 60. We're back below 50 in momentum. We're just looking to play the rebound. Ultimately, and this is critical, ultimately we'd be looking for this rally to offer some short exposure. But the initial immediate focus or the immediate risk is for a bit more of a recovery here in Euro Oz. So your first target is going to be just the objective median line right off the highs. If we get through this, secondary target takes you into 157, and that's going to be not only the 50% retracement of this decline, but the 50 line, which is a bisector of the upper half of this descending median line formation. How do you get this bisector, guys? A quick trick. You can't get the bisectors on MarketScope. You can on other different platforms, but if you take a basic retracement of the range, okay, make sure that you keep that perpendicular to the baseline there. The 50% retracement, and then just mark and extend your median line off that 50% retracement. You can see that we've seen some really nice catches on the lower. And again, on the break of the up of the median line, that would be your first initial target. And let me just show you that 50% retracement comes in at 157 right on the bat, 157.04. Here's what it looks like on the 30-minute chart. And here's what we looked like last night. So we're holding within the confines of this descending channel formation, descending ML formation. This is embedded within the broader structure here. I know if it looks a little messy, I'll clear it up in a minute. But you can see that median line offering some nice support. The upper median line parallel right now converging on a basic 236 stretch of the decline. That gives you 41.16 as near-term resistance. Just above that, let's say into 43.30 or so, this is going to be the quote-unquote near-term breakout level. If you get that breakout level with the median line for the broader structure, you'd be looking for that rally towards 55.75 and that 50% retracement, that 50 line, and that takes you into that 57.04 region. All right, so we're looking to buy pullbacks towards here. This is key resistance near term, and the breakout above this would, again, having us look for pullbacks to get long. If we move to the downside and we break below, again, that 200-day moving average, look for initial targets at the 618 retracement, that's 50.74, and that comes in line with that median line from the highs. So broadly looking to buy pullbacks, looking for long triggers while above that 200-day moving average. You need to see the pop through 54.16 to really validate a more meaningful recovery here in Euro Aus. Still like the trade a lot with what Euro Dollar is doing, which we'll take a look at in a moment. You know, Euro Dollar still has the propensity to make that last push lower, but I do like, you know, looking for long exposure roughly around that 109.60 level. We talked about that in the radar chart earlier last night, but to suggest, that is, that you could get another pullback opportunity to get long here in Euro Aus. Keep in mind, Euro Aus, much wider range ATR. Okay, 61 pips, a quarter of the daily ATR. So keep that in mind if you're taking any near-term exposure on this pair. But the premise of the entire operation here is that we're coming off of a major near-term support. And we'll be looking to get near-term, we'll be looking to extend that rally a little bit higher. Medium-term, we'll be looking for that rally to get back on the short side for Euro Aus. Any questions on this pair before we move off? And again, ultimately, we'd be looking for that rally to sell here. Okay, moving right along, let's jump into yesterday's radar charts. First up on tap is, I believe it's the Euro Dollar, if I'm not mistaken. Dollar Swiss. Okay, it's the same trade, the Euro Dollar and Dollar Swiss. Swing trades, we're looking for still 99.55 entry, I believe, on the short side for the swing side of things. From a scalping standpoint, we were looking for this rally to extend into this region. And then again, this would be a really nice opportunity for some fresh short exposure just above where the swing trades are looking. Major key support, excuse me, is going to be right here. 98.70, not just because it's a 38.2, that holds no bearing per se, but it's the objective weekly opening range low and the median line off the high. Okay, so very clear-cut levels here on Swissy. Again, for those of you who are new to the room, I see some new names here. Always remember, when you're going through the radar charts here, guys, if there's a link or a hyperlink on the pair, that's going to take you to the previous time that we highlighted that pair in the latest report. So here was Swissy earlier in the week. We saw that top side stretch, looking for a stretch higher to get on the short side. Here's what Swissy looks like now. Okay, before this, let me show you the daily real quick. So we talked about this earlier in the week, and we're looking ideally for a stretch near that parity 27 level, 618 retracement. You got the yearly open there. You got former trendline support, now resistance there. Big region. still could make a run on it. Although from the momentum signature, looks like we're seeing a little bit more trouble here trying to get through that 100-day moving average, only making one day close above it, one daily close above it before reversing sharply. So we might not quite get into that. We're still in the broader downtrend, guys. So again, we'll be looking to sell rallies in Swissy. Here's what it looks like, or here's what it looks like now, or last night rather. And here's what it looks like now in the 30-minute. Okay, so you saw that rally extend a little bit higher, having some trouble near that 100-day moving average. Again, ideally, you know me, I don't really like putting limits, but this is a limit I did have on it just because of the nice confluence that we have here. Former lower median line support. We broke through yesterday, now resistance. We added this here in the webinar yesterday, if you remember, in the intraday webinar yesterday, just as kind of a quick eye. Looks like it caught the low pretty well, highlights the upper median line parallel at that same region of resistance, and a basic 618 of the weekly range, or the decline off the weekly high, let's say. All right here. So looks like we might miss it on the entry there, but we'll see what the U.S. Open looks like on a downside break. You're looking again for a break of the weekly opening range to really get this thing going. Key support in your term 98.70. Like the short side for Swissy. Any questions on dollar Swiss? Let me see what the near-term chart looks like. Okay, we'll come back to this. Again, remember the divergence, same thing that we're seeing on the Kiwi near term. So just use some caution here. You might get some back and forth before we open up US trade, but broadly looking for a rally as high as we can get, or as close as we can get to that upper median line parallel to get short. A stop against the Asia high or the London high here would be the best way to play this one, in my opinion, looking for that downside stretch into the weekly opening range low. Okay, so that is dollar Swiss. The euro dollar is also a setup, very, very interesting, that we were looking at here yesterday in the webinar, where you're talking about the break below 110.55, 110.45. As a big, big support level for me. We were looking for a dip near 109.60, 109.64, key 618 retracement of the advance, and you also had the 100-day moving average right there. Here's what euro looks like now. Not surprising with what we're seeing in the dollar pop higher to see euro testing that key range low. 109.60, 618 retracement of the 2016 range. Here's your January low. 100-day moving average, almost right there, just below 109.60, comes in at 109.56. And basic former trendline resistance. Resistance, resistance, breakthrough, support. Okay, so I'm looking for long exposure off this level. Momentum is not really giving us much of any type of bias. It's just slow slider below 30 doesn't really suggest much. And the bullish invalidation level, the broader bullish invalidation level for the pair is still going to be right here at this 109.26 level. It's the December high day close, that reversal close that we made. We talked about this yesterday. And a break below that would really sort of invalidate this structure here and shift the bias back to the downside. At the point we are at right now, I'm looking for long triggers. Here's what euro dollar looks like near term. Damn it. It looks like that long trigger did give out. So I was looking at this right before the webinar. Oh, goodness. There it is. Yeah. So the break tested as support, move off. That's like the tightest entry stop you'll ever get. Looking for about 29 pips per scalp. So look for that top side stretch. Near-term resistance, just initially, look for that median line. The break we need to get for the reversal play in euro is still 1045, 1058. Okay, and I really can't stress that enough. So looking for long side exposure into 1055, 1045. Use some caution. Take some off the table. Bring your stops up. If you pop through, I'm all on board to play the reversal play. Okay, we've been holding this descending median line formation for over the span of 3 weeks. And certainly a topside pop here I do think would give you some play. We've been marking divergence. I noted this yesterday in the webinar into the lows here. So, we'll look to see that momentum barrier carry through 60 for the first time in over 2 weeks to suggest a broader change in momentum. And again, for those of you or anyone who's newer to the webinar, or a quick reminder, this is a beautiful example of how we want to use momentum signatures to our benefit, aside from the overbought sell, oversold buy type of mentality. If you take a look at the pair here, ever since the high that we made here on February 11th, momentum has been unable to break above 60 since. Breaks up 40, hold at 60. Breaks up 40, hold at 60. Breaks up 30, hold at 50. Okay, so we'll want to see the momentum bear or the momentum signature cross above 60 to validate a little bit more of a change in behavior from the momentum profile, with a break above 1055, 1045 really clearing the way for a steeper advance here in the euro. Question here saying euro dollar took a short last evening, pulled it off 10 pip profit because it too reversed before it went through the target in London time. And I missed the long this morning too, wasn't sure was really turning up then. So Eileen, on a setup like this morning, and why I was waiting for it is because we're at a key structure of support. You guys, we need to have confidence and conviction in our analysis. And a key level of support, such as the confluence we're seeing here, you know, you're just looking for a decent trigger of any type to validate it. Why? Because your stop is so tight, you're at a major key level. If it breaks below, you're out real quick. And that's the secret, guys, with your strategies. You want to take losses real quick and know when you're wrong. The winners you want to let run. Dave says, LOL, I missed the beginning of the webinar because I was getting long euro. Dave, maybe I should have started the webinar a little bit later with you, brother. I would have caught that too. But I do like it. Use some caution. If you're not in yet, guys, don't go chasing here. You might get a pullback to offer some nice long exposure heading to US trade. But watch that upper median line parallel. Watch resistance 1055. Love it if we get through that. Really love it. All right. Still missing those key levels of support and resistance on my own then, Eileen says. So Eileen, keep your eyes on the daily chart, guys. I try to provide you as many kind of perspectives on the trade as I can. This, you know, type of confluence, we talked about it earlier in the week in the euro dollar report. If you click on that link, right here, that's the scale chart. Whoops, here's the daily. Again, 110.45 broke. The next level of key confluence was right here, 109.63. So never lose sight of the larger daily pictures. Again, if you're looking just at the 30, you might not have caught that that was such a critical level of confluence support, which is why we take this top-down approach. You got to get the highway map of the daily chart, marking your major key freeways and highways and turns. Then we jump into the intraday charts to get a little bit more of a near-term picture. See them on your charts. It makes sense when you point them out. I'm just trying to see them myself and have little ways to learn yet. Comes with experience, Eileen. You're in the right place. And again, these will slowly start filtering in for sure. I'm very confident. So just keep your chin up. And again, we'll look to see for the euro dollar if I can get some long exposure on that. I do like a breakout here. For the euro, and one other thing I want to just put as a caveat to kind of watch this during US trade, with euro at such key support, a 618 nonetheless, and the dollar index coming into a resistance target, this 50% retracement, use these levels to your advantage. Okay, this is again another swing high, the 50% retracement, and the one thing I want to say is for the close today will be paramount. If we push through this, forget about the dollar short exposure on the index. I wouldn't be too confident, but if we hold that resistance and euro dollar holds that support, dollar Swiss holds that resistance, certainly I think would be a nice accompanying play on both of those there. So any questions on euro dollar? Before we jump into your questions, and I do want to just take a look at some of the commodities that are also moving here today. Okay. Okay, no plays there yet either. Okay. Moving right along. Last but not least from yesterday's radar charts is Aussie yen approaching an area of near-term support I do want to be mindful of. Here's what it looks like, or here's what it looked like yesterday. Here's what it looks like now. Before we start in Aussie yen, I just want to go over a couple of things. Here's Aussie yen on the weekly basis, and this was part of the 2015 or 2016 trade opportunities of the year that we published on Daily FX. Obviously, my call was the Aussie yen to the downside here as we were heading to the end of the year. When we published it, you had so much resistance coming up. Multi-year median line formation off that 2013 high. You had the 52-week moving average, which is again just the yearly moving average here, just above basic channel support, resistance, also here. Okay, so the breakout here would have invalidated our downside trend, and we would have been expecting a run towards the 2015 high. That being said, our first target at 85.47 is out. Second target at 80.15 has already been taken out as well. The final target from that yearly forecast is way down here. That's the 618 key retracement off of the advance from the lows that you made post-crisis. And the 1618 extension takes you as low as 72.50. I'm sorry, 72.05. So point being, guys, you're at major support at 80.16. We did see a major stretch below that. We saw a couple of breaks below, haven't closed below there yet. And if you look at price action from the weekly basis, look at what price has done every time we tried to breach or run into that confluence resistance, former support. Sliding parallel off the high there from that swing high in 2011, right here. So from a weekly standpoint, the weekly high from last week and this week around 82.30, major resistance. 50% retracement, 80.15, major support. Here's what it looks like on the daily. A daily picture looks very similar in that you're coming into near-term key support. Well, what's 79.88? That's the low day close for the year. Also coincides very nicely with the lower median line parallel. Now, we don't know that this slope is in fact the operative slope that we're playing off of yet. If it is, though, it highlights key support at that confluence that we're watching already. Okay, and certainly objectively, the low day close, if we break below that, would suggest that the broader downside bias remains in play. Here's what it looks like on the 30-minute chart. Oops. Sorry about that. Boom. And here's what we looked like last night. So what I wanted to highlight here is, again, if this slope is in play, as I highlighted yesterday, we didn't know if this slope was in play or not, but it highlighted the median line coming into that major critical support, 79.88, the low day close. Turns out that the 50% retracement of the advance off the low comes out right at the 80 handle, 79.99. Nice confluence region here of key support. We're looking for that drop yesterday. We got it. So the short side bias near term immediately is at risk while above this region. Am I necessarily looking for short triggers here? Absolutely not. You're at support. You're seeing some divergence in momentum. From here, you're probably going to see a rebound to start off the US session. This is your clear-cut major key support. And a break below this, we'd be looking to sell rallies towards 79.42, 78.81. Objectively, also what I wanted to note is that this is simply the weekly opening range. And remember, it's more of an art form than a science, guys. Yes, the weekly opening range technically comes at 80.22. We're 20 pips below that. I'm not going to go ahead and take a short into support, right? We're still here. So I'd rather see this break, look to sell a rally back towards against that level, okay? Or if we get a topside trigger here near term, I'd be more than willing to take a half leverage trade just for the long side to play a rebound, looking for about 42 pips. Again, eventually, inevitably, we would be looking to sell that rally, okay? But a very well-defined range in Aussie yen. Just give you a little zoomed out picture there. Again, a quick reminder, if you do need to take a snapshot of any of the charts that you see presented here, is a camera button in the top right-hand corner of your webinar screen. Go ahead and click that if you'd like to take a sort of freeze frame to refer to these charts later. Questions on Aussie yen? Wider range ATR, if we do get below this level, again, I think you see a nice run to the downside. Subsequent targets 79.42, 78.71. Dave says, here's your Euro entry. Let's take a look. $109.60. Let's get a run on 109.60. I'm looking for it. All right. Not bad. Give us a nice reset here into the US Open. Any questions on Euro dollar or Aussie yen? Okay. Let's jump into your questions here real quick. Before we do, just a quick gander on some exogenous pairs I'm looking at. I know it's not something that we typically talk about here, but I do want to present just this dollar CNH trade. I know the carry cost is very expensive here, guys, but we do want to be mindful of what the broader dollar positioning is doing. And here's another pair where we talked about that support last week. I don't follow this trade. I just glanced over it last night and saw that support had indeed held. That was a 60% or the 618, excuse me, retracement of the advance off that November low. Also, if we connected those median lines that we were looking at last week, that median line also offered some support. So the rebound now coming into its initial area of resistance, that's 655, 654.91. You have a basic 236 and basic trendline resistance coming up right in this region here. So over the next couple of days, we'll be looking for, or in the next day or so, we'll be looking for that stretch to see if we get some resistance here and a pull to the downside, or if we get the break further higher. Okay, so keep that on your radar. I'm sure there's going to be a lot of talk on this move once we do get a little bit more of a severe move. If we see anything like we saw earlier in the year, likely to royal market some more, but looking for some near-term resistance here on dollar CNH. The other trade I just wanted to kind of just touch on real quick is Crude. You might have seen me tweet this chart last night. Kind of made some commotion here. Look, we talked about it in the webinar, guys. 36.65 major key support. It was a beautiful hold. We saw the reversal take us right back below that former lower median line parallel for the operative formation that was holding Crude for some time. Near-term support. I'm looking at this. So this is the current operative median line we've been in off of the September-October highs from last year. Median line comes right in line with where we are right now. Major key support and the near-term bullish invalidation level will be down here at 29.08. Okay, it's a 618 retracement of the advance and the lower median line parallel. And remember, when we draw these guys, we never have confirmation or conviction that's going to be the slope of the market until we see the market react or price react at one of our levels. And this, I think everyone would agree, is the most perfect reaction you can see. So it gives me confidence, gives me conviction that I should be paying attention to that lower median line parallel, and that comes in with the 618 with that swing low from the 19th, which was Friday. All right, so might get some more pullback here in crude prices. Wouldn't be surprised to see this thing sink a little bit lower, sub 30. But at that point, near 29, we'd be looking again for possible long exposure, maybe another run on that support trigger and momentum before a rebound higher in crude. One other thing, and I think we noted this yesterday, is just that this is simply a test of the monthly opening range. Here's your monthly open. You stretch into a low, test the monthly opening range high. Didn't do jack in February. The entire month of February is a wash as far as the opening range strategy is concerned. You're right in line with that same range. So clear-cut levels here in crude heading deeper into the week. Again, keep in mind, you do have the major event risk for the week coming up later on Friday. Tomorrow, you do get durable goods orders in the United States. Again, the highlight's going to be that second read on fourth quarter GDP. Also tomorrow, do remember you do get the release of the UK revision for fourth quarter GDP. Not expecting any change there, but something you want to be mindful of if you're trading any sterling crosses. Last but not least, if there's no other questions here on crude oil, is gold. And as we said yesterday, we're looking for a break of this consolidation over the next 24 to 48 hours. Well, you got it. Okay. The consolidation, as we noted yesterday as well, sorry to keep saying that, but these have been playing out rather nicely, guys. And let me show you the 30-minute chart that we went over. Just a basic naked chart, nothing on it, but some basic trendline resistance, some basic trendline support. There's the break to the upside. In case, again, the tell on these guys, you never know if the break is legit. The tell on this is the break, test the support, and move off. That's going to be always your ideal and confirmation trade for playing any type of near-term breakout play. So gold breaking to the upside. Mike, how's gold rallying at the same time of the dollar? Welcome to the new world, ladies and gentlemen. When I hear people say that to me, I kind of get concerned because that is not always the case, guys. In strong risk-on, risk-off correlated markets, yeah. In the financial crisis, it was like textbook, dollar up, gold down, gold up, dollar down. Same exact thing. It's not always going to be the play. And especially now where the fundamentals pushing these trades are not necessarily just interest rate expectations, right? You're getting some risk off in markets. You do see that equity markets turned over pretty heavy over in Europe. They trade lower over in Asia as well. That's a bid for gold. Okay. At the same time, you're seeing monetary policy stance continue to remain steadfast, even though we're seeing negative rates and further easing around the world. You had Stanley Fischer coming out saying, everything's on hold. There's no imminent move or look for the Fed to move into negative rates. So we'll be looking for the U.S. data for sure to give us some tell on broader price action in the dollar crosses and in gold heading into the end of the week. But I just wanted to highlight that it looks like that consolidation, which is typically a continuation pattern, looks like we're making a break here to the top side in crude. In gold. So resistance, I know we flew through it earlier in the month, but I'd still be looking at that upper median line parallel. More importantly, the stretch high that we made so far for the month comes in line dead on with, bear with me, basic sliding parallel extending off that high from May. It's the same slope of that basic trendline resistance, which already caught the highs essentially in this last stretch. Okay, and there's that 1263 dead on with that slope. Subsequent targets, you're looking for the 618 retracement of that decline from the highs they made in August of 2013. That's 1285. Any questions on gold? You're going to likely see a lot of headlines on this today. All right, so that's everything I have for you, and I want to jump into your questions. So I do see some notes here. Do you have any notes on Aussie Kiwi? I haven't really looked at Aussie Kiwi too close, but we can always do that for you, Ricardo. No worries, man. Let's take a look. And the reason I haven't really been focused on Aussie Kiwi, to be quite honest with you, Ricardo, is because I feel like they've kind of both been moving a little bit more in lockstep, which is not what I'd like to see. So if we take a quick look at relative performance on the session, Aussie and Kiwi, both down 0.45, 0.47, almost identical on the session. When I see them move in tandem like that, typically Aussie Kiwi won't be on the radar. My best plays in Aussie Kiwi is when we see a divergence, not only in the performance necessarily versus the dollar, but their individual performance versus their major counterparts. So as it stands right now, I don't really have a strong opinion on Aussie Kiwi, but there are certainly key levels that you want to remain in view. So if you guys remember, again, those of you who've been with us for a while, the operative slope off the lows from that initial 2014 stretch that we made has continued to be the major slope or operative slope we've been working on for the last few years here. That same slope extending off the low from October, still offering some support here this month. So you saw a nice topside stretch here. The only thing I would be interested in on a trade here, Ricardo, is on a stretch higher towards that 109.10, 109.35 region. Absolutely critical resistance. We saw it run last month right into that region. You have the 200-day moving average in there now, a longer dated basic 236. And this is the July low day close, which ended up being a major pivot in price. Okay, you see that gray line right there. So that's sort of the key resistance region I'd be looking for. A topside break there gives me the breakout level, looking for that operative slope. More importantly, or more appropriately, I should say, I would be looking for a rally into this region, again, to possibly offer some short side exposure. Near-term support, 107.20. I think that's pretty rock solid. 618 of the range that we've been in for the last 4 months, and also last week's swing low for Friday. Mario said, today tested the open day close of February. The open day close, that's an interesting tidbit. So here, yeah, the opening of February, the close of that session, not typically a level I actually look at. Mario, to be honest with you, I like to look at the high day close, low day close, and monthly and yearly opens. I'm not sure if an open day close is going to give us too much, but I'll bet you that if we take a basic retracement, that completed something. Wouldn't be surprised if it was like the 618. Nope, not the 618. Okay, 764 is going to be right on. There it is on that stretch there. But in any event, this is the picture of the daily chart. So watch this resistance. Yes, I do know, I see what you're talking about here, but the major key resistance is going to be up here. Let's see if the near-term chart has anything different for us. Let me just snap these lines, guys. Bear with me one sec. Yeah, momentum looks like it's turning here. Ricardo, it does look kind of heavy. 1 hour on RSI is on a break. So the 30-minute doesn't have a decent trigger. I wouldn't be working too aggressively with that. Actually, break, test his resistance. Yeah, could be a nice move to the downside here, sure. 3-point touch, 1, 2, 3. You break it as support, test it as resistance. That's a nice break here to the downside. I do like the momentum signature in my eyes personally has turned over with that kind of move. Ricardo, the only thing I don't like looking at an hourly RSI, brother, is because an hourly RSI, man, you need to wait for that hour to close, okay? Remember, all oscillators, guys, RSI, stochastics, MACD, whatever you're looking at, these, the signal line doesn't get pegged until the candle closes. So my problem, Ricardo, looking at an hourly RSI is that this thing, if this thing drifts down into 108.27, closes the candle back above 108, you're going to be in that position, and this oscillator will suck right back above that trigger. You won't even know it hit. So that's one thing. It does look like it might have broken a trigger here and given us resistance, just like it did on the 30 chart. So let me go back to that one again. And it does look like, yeah, the momentum signature is turned over. So that's one side of the puzzle. The other side of the puzzle, Ricardo, is where's your stop? And that's what gets me concerned on a position like this. You'd have to put your stop essentially against the session high, a little bit outside the range of what we're looking at per scalp. You're looking for 24 pips. That gives you a high about 58, almost 30 pips on the upside. So not your ideal entry. Momentum looks like it's turning over. Still doesn't mean you want to jump in. I still want to be looking for a little bit more confirmation. Let's see what the near-term chart looks like. And yes, euro, come back down. Give me that entry. New Zealand dollar. Yeah, we don't have any short entries left here. So look, if you get a rally or a near-term rebound to open up the session and you can take a stop high against Europe, okay, that gets you 24 pips, I'm all for it if you get a short trigger. I'm not going to, advocate trying to chase this lower on a break lower. I need to get either a rally to get back in, or if it does break, a rebound off the next support structure to possibly take a swing high stop. But from here, it does look like the momentum signature is turning over. I do like that. So who is that for? Ricardo, I hope that helps, man. Let me know if you have any specific questions here on Aussie Key. I like what you're looking at with momentum. And like I said, the signature looks like it's turning over. Price and actually putting that into an active trade, I just need a better stop. I just need a little bit better of a stop. He says, thanks, Mike. You are the man. Cheers, Ricardo. Anytime, brother. Aussie dollar sinking, so affecting Aussie key. Yeah, it looks like, obviously, Eileen, we can look at that objectively. Aussie losses are looking to be outpacing the Kiwi losses for sure for today. So that's why you'd be looking for a little bit more of a downside stretch near term for Aussie key. But I would like to see a much more divergent performance than that to get a very strong opinion. Look, we're scalping, we're near-term trading. I'm never going to take it away from you guys. 24 pips, if the signal is there, price is there, you have a risk to reward in play, go for it. Absolutely. But for the broader trend shift or the broader shift in trade, I'm not quite ready Aussie Kiwis turning over just yet. Be much more inclined to take a more aggressive stance if we were to make it into this key resistance again. Ricardo says, please, there is resistance on the daily. No? Plus the triangle? Yeah, I know. I know exactly what you're looking at. You're probably looking at something like this, and that coincides in that region as well. Just for the sake of keeping my charts a little bit cleaner, Ricardo, I don't have it on there because I'm highlighting that region either way. Okay, and that region is littered with stuff aside from that basic trend line, the 200-day moving average, the swing lows, and the pivot that you made in price last year. That July high day close, the 2016 high day close. It's all here. It's all here. So Ricardo, whether it's a trend line we're looking at or a moving average we're looking at or a Fibonacci sequence we're looking at, as long as we're all looking at the same level, like I always say, guys, it's all about the level. It's all about the levels. So I hope that helps, Ricardo, on Aussie Key. Any other questions on this? Feel free to throw it out. We did not cover Eileen Sterling. Oh, Eileen, I saw your question earlier. We'll jump into that as well. But I do want to take a look at the British pound, also now going long off key support as the New York opened. Sterling dollar. So sterling is coming into some slope support. You might have seen Jamie's post a little bit earlier today. I have that there too, or I have it a little bit lower than what he's looking at. But here's the thing, 88.6 retracement. This is a long dated off the, if I'm not mistaken, off the crisis lows near 31.21. Come on. Yeah. So off the 2009 lows, 39.21 is the 88.6 retracement. We dabbled just into that now, kind of popped back up. Jamie's looking at this same slope. If you take a sliding parallel off that low earlier, that's basically what we're testing right now. We can actually just add that on. Opa. Well, my slope is a little off, guys, but just because of the lag in the computer here, I don't want to waste any more of your time. You see where it's going, right? So it's basically just below where we are right now. So for me, Eileen, I think this is a little bit different from what we're looking at with the euro dollar. Euro dollar is in a little bit different of a world here. The yearly open is still, we haven't even come near it still. It's still all the way down here at 109.24, last ditch effort of support. Where sterling, you're at the extremes already for the year. So Eileen, I'm not going to be looking for long triggers. Just not. Hoping to see a 5-minute trigger on cable short soon, Graham says. I'd rather be selling rallies, but again, you're at the weekly low, Graham. So keep it in mind. Let's take this look. These are the levels that we presented earlier in the week. And the basic premise of the idea, and highlighted on not last night's radar charts, but the night before, was the fact that we came into this interesting level and saw a nice bounce. Okay, momentum quickly recovered from sub 40. This is the confluence of the 1618 extension off the high, the lows that we made previously in price right here in January, and you saw a really nice reaction. So the initial play, or the initial thing that we were looking at yesterday, was, look, if we stay above here and you see another defense of this, it actually might be a nice opportunity if we see some strong divergence there, that there's going to be a shift in both momentum and price. Well, no triggers gave out essentially to the long side, and this thing just collapsed through. Um, I personally don't really want to stress trying to call low on this. And again, I really can't stress the fact that you're going to continue to see this godforsaken headline event risk with this whole Brexit thing. It's just the nature of the beast right now, and the nature of the beast on all the sterling crosses. It's not something I'm just looking to really mess with. Eileen says, okay, about the sterling in the extremes, rock and a hard plate. Exactly. He says it's doing a seductive thing again, sterling dollar. Yeah, it does that. It suckers people in so bad, guys. Known as a professionally traded market. I've told you this many, many times. So I have all of the utmost respect for sterling, and I only get involved in the sterling cross when there's a clear-cut definitive play. 9 times out of 10, I'm not taking counter trend trades on this pair specifically. I like to trade with the trend. So getting short, not interested in, because we're at extremes, and I don't want to take a short just pips off the extremes. Taking longs, not my game. Trying to call a low in the pair. What does that mean? Stay on the sidelines. Stay on the sidelines. Of all the setups we cover, guys, if I get involved in 2 of these today, that's going to be a win. I'll track them, but sometimes just simply not a play there. Sometimes it's something you want to keep on the radar. And for me, for the British pound, I'm not even looking at 30-minute price action anymore. We don't have any previous price in near term to get clear-cut definitive levels to the downside. So for me, it's all about this. All right. And objectively, you've made a break of not only the monthly opening range low, but now a break of the yearly opening range low. Not something I want to try to fight just yet. Okay. And listen, that can be invalidated very quickly. If this thing rockets right through and see a nice strong reversal right through 140.60 again, sure, we can start to talk about it then. But as it stands right now, not willing to take a jab at it. Does that help, Graham? Again, I don't want to deter you, but just my 2 cents worth, man. On a trade like this, I think we wait for clarity is a little bit more of the prudent thing to do. I want to take this question, this strategy question here for an example on the Aussie. So let's bring up the Aussie dollar again. Here's what the Aussie looks like on the daily. You saw a stretch high into that 618 extension. This is the extension off the low. We tried to break through and pull back. I'm going to be honest with you guys. We talked about this early in the week. I was looking for a stretch here in 72.70 before a move like this. It's a 1618 off the low. More importantly, the yearly open comes in at 72.81. You have the 200-day moving average in that region. For me, this was sort of the ideal entry. Didn't quite get up there. And now, at this point, you're challenging the top side bias. So the bias flipped to the upside early in the week with the break of last week's well-defined range, which never gave out. Now that we failed at 72.40 here, got some strong divergence into that high, right? Price action making a higher high, the oscillator making a much more dramatic lower high, giving us indication again that near-term momentum may in fact be turning over. So again, like for a trade like this, we were looking at it earlier in the session. Who was that was talking about this? Was that Mario or Munho? With the Aussie position, there's that 618, 71.40. Okay, as opposed to trying to press along from this, you can see that that long came right into the resistance level we were just talking about and failed. So here we are moving down again. Look for targets initially at 71.40, and then a break below the weekly opening range low, i.e. 71.27 region. This, you're looking for that run into key support right there at, what is that, 70.93? Right there. Not sure. Clear cable, 25% ATR divergence against against resistance falls inside the low. We'll watch and we'll see who's right on the 5-minute chart you're talking about. Graham, I'm not completely opposed to it. For me personally, it's a downtrend. So sure, if you get clear cut short triggers, I'd be on them. It's just be what's the word? Discipline to our strategy. So if you're going to do that, Graham, you're at the extremes already. You're at the extreme fresh yearly lows. Just every time you get that quarter ATR, snip a little bit off the side. Okay. So going long Aussie dollar yesterday was too close to the resistance and have given attention to other triggers. It was continuing higher. Yeah, you're more than welcome, Graham. So let me go back to the Aussie real quick for you. We are over on time, guys, but let's just take this question for Eileen. Says, here's an example. Aussie dollar tried along at 11:45 Eastern AM, and instead of continuing higher, stopped me out by the afternoon to go long again about 8 p.m. Eastern, and again stopped out. Maybe should have seen that it was at high extreme, and I was trying to follow it higher when I should have been seeing other signals that it was turning over. So here, along, I see what you're saying. And then again last night. Okay. Sure. I see exactly what you're talking about, Eileen. Let's just walk through it real quick, give you some quick notes on this, and then again, we'll touch base on this again tomorrow if need be. But there's a trigger that you were looking at. I completely see what you're talking about. You kind of drifted sub 40, so you're seeing that this thing's kind of giving a little bit heavy of a break. But on a move like this, here's the thing I would say to you is this. So based on your entry, if you didn't catch it off the lows, obviously, I'm assuming that your stop was against this low. Looking for about, where's Aussie? You're looking for about 25 pips to the upside. You got nowhere near that rally, right? Before it starts to fizzle out and move lower. On a move like this, Eileen, yeah, you're at a level. I did like the level that you're at, or here, 11 o'clock. You're at that swing. Okay, we had a trend line there, sure. The rally fizzled and you came off. On a trade like this, okay, you're going to take a stop. Very simple. The only thing I would have put as a caveat is, again, we're trading against the daily range, right? We talked about the Aussie yesterday and the fact that, if anything, the long that we would have been looking for, and I remember speaking to you directly about this, Eileen, was if we get a pullback towards 71.71, 71.77, I'd like a long position off that. And if you would have taken that trade, you would have barely squeezed out 25 pips. It did rally a good 30 pips off that low, okay, before turning over. Long story short, be dynamic, okay? Yes, I agree that maybe this wouldn't have been the best entry. This probably would have been a better entry. But even then, if you didn't squeeze out the 25 pips, as soon as you see momentum holding 50 here, breaking back to the downside, you're coming off of a downside slope. On a trade like this, I'll be more than happy to take a break even. I'll show you an example of this, guys. Yesterday on on Aussie Swiss, you guys remember we were talking about Aussie Swiss here in the webinar? I had it was right after the webinar. Let's see where it was here. It was this part right here. I had a long position after this thing tagged basic trend line or basic lower median line parallel support. Momentum was dilly-dallying here, came back above 30. You got a trigger break to the upside. Ahead of that, you had a real clear-cut trigger in a 5-minute chart that gave you the long. On a trade like this, we popped through the median line. As soon as we popped through the median line here, what'd I do? I brought my stop to break even. Because if we get back below that median line, I want out. It's probably not going to make a run towards the upper, which is what I was looking for. Well, guess what? Came right back and stopped me out at break even. When we're trying to call lows, and that's exactly what you were doing with Aussie, and it's exactly what I was doing with Aussie Swiss, we're in a downtrend for this session. You're at the low. You get a topside trigger. On those types of trades, as soon as we clear the first level of near-term resistance or support, the opening range high for that session, I'm very quick to bring the stop to break even. And you'd be surprised, guys, if you look through my trades, and I'm not embarrassed to tell you, I have a lot of break even trades, a whole lot, more than I'd like to admit. And for me, I'd rather get stopped out at break even, get a chance to step back and take a look at the market. If I need to re-enter, I'll do so, than to try to press a trade and just leave my stop 25 pips away because that's the strategy. No, we're trying to fight the daily trend. I'm not going to take a 25 pip stop. If the market moves in my favor and I did catch the low, great. It's all about putting yourself in a position, guys, that if the market does what you think you're standing to gain. If the market doesn't do what you think, you're minimizing the possibility for a downside move in your account. Took a second trade then too early last night. Should have waited until it sunk even lower to try it again on the long. Yeah, and that's something I used to do a lot, Eileen. It's called revenge trading. It's like you take a long, and even if, let me take a step back. I got stopped out not on this stretch here, guys. I got stopped out right nearly after. Okay, came right back and stopped me out. Inevitably, I would have been able to squeeze out barely a 30 pip gain, right? And I was like kicking myself. And when it came back again, I said, you know what? Maybe I should try it again. But there's really nothing giving me that conviction. You had nothing in momentum to suggest that you were going to see that move. In fact, the trigger just quickly sunk right back below it. If you take a look on the 5-minute for Aussie Swiss yesterday, so here's here's the entry you took. Here's the entry I took on this slope here. Came right back higher, brought my stops to break even. It stopped me out, and then again, it swung higher. And inevitably, like I said, I would have squeezed out barely that 30 pips, but that's okay. Am I going to start buying it again once we come into support? No, because the daily trend is still to the downside. There was a nice trigger here, same type of deal. Market rallied. This one would have actually given you the 30 pips stretch before it moved over, but with what is happening in the markets, it's going to be better for us on all of these positions, Eileen, if we had just simply taken the shorts. There's a short trigger, would have worked out. There's a short trigger, wouldn't have been too crazy about, but once we spiked below and came back and tested as resistance, it would have been a stop against that high. Worked out real well. Worked out real well. So does that make sense how we kind of like walk into it, Eileen? I hope that kind of walkthrough gives you a little bit more clarity of how we want to react to the trade as it's progressing. And remember always what the daily trend is and what markets are doing in the now. Yes, we're coming into support, but we want to be nimble because we're trying to call low. So if you're going to take a trade like that, reduce your leverage size first thing right off the bat, and be quick to bring those stops to break even. So I hope that offers some clarity. Again, we're over on time. I've got to run. We're going to wrap things up here. Don't forget, 1 o'clock, Jamie's midweek strategy webinar. The birthday boy is going to be on tap today with some great stuff on some of these swing setups that we're looking at on that side of the business. Guys, best of luck trading. We'll be back here tomorrow at 8:30 Eastern for another intraday strategy webinar. Best of luck trading, guys. Cheers.